Hello, dear judges and teachers. I am Cynthia Yao from the German Swiss International School, Hong Kong. Today, I'll be recommending buying the stocks of PDD Holdings, a high-growth and group-buying e-commerce marketplace. The stock's Nasdaq code is PDD. Its stock price has increased by 420% in the past 5 years, while its net profit increased by 670% in the last 3 years, as of March 2024, outperforming many strong competitors like Alibaba and Amazon. First, I will give some background information. This slide is about PDD's founder and former CEO, Mr. Colin Huang, who graduated from the University of Wisconsin with a master's degree of computer science. In his vision, PDD is to create value for the society both innovatively and consistently. So, investors typically ask 3 questions. Does the company have a wide economic moat? Is it in a good industry? Is the stock cheap? To answer these questions, my presentation has 5 parts, and this is my index for today. To begin with, I will introduce PDD's business model. The company is headquartered in Shanghai, China. It provides an online low-cost and joyful group buying service with a unique customer-to-manufacturer supply chain. It supports many China's for poor farmers to get rich. PDD describes itself as China's Disney plus Costco, bringing happy and great experiences. It has 2 revenue drivers: online advertising, which accounts for 62%, and transaction fees, which account for 38% of its revenue in 2023. Now, let's take a look at China's retail e-commerce industry. It's the largest e-commerce market in the whole world, with high entry barriers and fierce competition, dominated by 3 companies. PDD is ranked number 3 with 900 million active users and 20% market share. The top 2 players are Alibaba and Dingdong, with 50% and 25% share, respectively. Moving on, in my view, PDD has a wide economic moat because of 4 parts. Firstly, it has a low cost and economy of scale. Secondly, it has a unique customer-to-manufacturer business model. Thirdly, it has industry-leading AI technology. And fourthly, it has support from China's government. Next, I will address PDD's financial performance. The graphs show that it has high growth and excellent profitability. It is also cash-rich and debt-free. Increase in active users has been the major revenue driver for PDD. In 2016, the PDD's monthly active user, MAU, was around 100 million. Tencent Group became its strategic investor. In 2023, its MAU may be near 1.0 billion, with 900 million from China and 100 million from 41 overseas countries. Triggered by its growth in users, PDD's revenue increased at a CAGR of 62% from 2021 to 2023. Also, due to its unique business model, the company almost has no cost of inventories, with a high gross profit margin of 63% in 2023. It turned profitable in 2021, and its net profit margin increased to 24% in 2022 to 2023, with ROE of 39% in 2023. I predict its revenue and net profit will grow at a CAGR of 35% in the next 3 years, with a stable gross profit margin of 63%, as shown in my PDD financial model key assumptions from 2024 to 2026. In previous analysis, we know PDD has a wide economic moat and excellent financial performance. Now, for the last question, is the stock cheap? I will discuss my valuation and present my target price for PDD. PDD's past financial performance has outperformed strong competitors like Alibaba and Amazon. I will use the price earnings method to value the stock PDD because the company is in a fast growth cycle. Based on my earnings forecast PDD stock was traded at 8.1 times for P to E in 2026, very undervalued and cheap. I think 15 times the 2026 estimated P to E is a rational and conservative valuation ratio. My target price is 226 USD with 85% upside potential. In DCF valuation, I used a WACC of 12%, a forecasted FCF margin of 20 to 25%, and a predicted terminal growth rate of 4% from the years 2024 to 2033. PDD's equity value per share should be 368 USD. My target price of 226 USD has a 39% discount to the intrinsic value. This is my PDD DCF valuation. In addition, PDD stock declined 18% year to date due to geopolitical concerns. In my view, this issue would not affect PDD's long-term cash flow generation, providing a good buying opportunity for value investors. Temu's global expansion and increasing global users will be a long-term catalyst for PDD. Now, moving on to PDD's investment risks. There are three main investment risks. Firstly, earnings visibility risks. Investors may witness lower than expected growth rates than are forecast for PDD. Secondly, geopolitical risks could be incurred by PDD's global expansion, which may impact PDD's profitability. Thirdly, product risks. Cheap and non-branded products may not be popular in developed markets. These products are offered by PDD. Near to end is my ESG analysis. Firstly, PDD contributes to global energy saving and transition in the environment. Secondly, PDD helps many of China's poor farmers to share the growth of the modern digital ecosystem in the society. Thirdly, in terms of governance, PDD has always been a good corporate citizen. Lastly, I will discuss the influence of AI technology on PDD. Despite its expertise in AI technology, AI with more than 6,000 engineers, AI technology will be a double-edged sword to PDD. On the one hand, the ongoing AI revolution may increase PDD's competitive advantages, but on the other hand, AI technology also exposes more non-China science data to PDD, which may incur foreign governments' concerns, limitations, and penalizations. This is my PDD balance sheet and cash flow statement in 2020 to 2022. In conclusion, PDD is an undervalued high-growth e-commerce marketplace with superior profitability. International expansion will be its long-term revenue driver and catalyst. This is the end of my presentation today. Please invest in PDD. Together, more savings, more fun. Thank you for listening.